We're going to take a look at 3 environmentally friendly investment vehicles that beat the S&P 500 over the last 12 months, and one of these over 2 times as much. So stay tuned for more. Thank you for watching. This is Richard with Wisdom Investor. We're going to take a look at some ways to increase your return on your money here today. We're going to take a look at some funds in the what's called the ESG category. This is typically in the environmentally, social, and corporate governance category. Keep in mind here, our goal here is to increase the returns on our money. We're not getting into any political stance or anything along those lines. But if you're looking for a way to generate more return, a higher return, this may be a way. One of these funds has, matter of fact, earned over twice what the S&P 500 has earned over the last 12 months. Typically, when you're talking about this particular category, you're talking about electronic traded funds, ETFs, or mutual funds that exclude certain type of stocks from their portfolio. Typically, that's alcohol and tobacco, weapons, fossil fuels, gambling, nuclear power, and adult entertainment. As our benchmark here today, we're going to use the S&P 500, and we're going to compare the stocks and the portfolio of these 3 different funds to the S&P 500, and also we're going to compare the returns over the last 12 months with the S&P 500. We will also look at the fund's objectives for each one of these funds. Here's the stock chart here for the S&P 500. Has had a nice recovery off of the March lows here. As of July 25th, 2020, the S&P 500 has had a return of 8.61% for the last 12 months, and that's going to be our benchmark here today. We're looking at the top 10 stocks for the S&P 500. You can see it's heavily loaded with technology stocks. We got Microsoft, Apple, Amazon, Facebook, Alphabet, Google. Then we got the Johnson & Johnson in healthcare, Berkshire Hathaway in the financial area, Visa, and Procter & Gamble. 10 stocks here make up over 25% of the S&P 500. Okay, so we've looked at the S&P 500. That's going to be our benchmark in this particular comparison. S&P 500 had a return of 8.91% over the last 12 months. We're going to look at 3 funds here. We'll start with the one that earned the least amount going up to the highest. The first fund we're looking at here is the iShares USA ESG Select ETF. So this is an exchange traded fund ETF that you can buy right over the internet through your brokerage. So here's the investment objective of this particular fund. It seeks to track the investment results of an index composed of U.S. companies that have positive environmental, social, and governance characteristics as identified by the index provider. It says YSUSA. Obtain exposure to a range of large and mid-cap U.S. stocks with leading environmental, social, and governance practices. It says here it avoids exposure to companies with low ESG ratings and severe controversies. It's used to build a sustainable equity portfolio. So if you're looking to diversify your investments, using these types of funds could be a good way to diversify your particular investments. Let's take a look at the return here over the last 12 months. The last 12-month return is 13.12%. Again, we said the S&P 500 was 8.91. Let's look at the portfolio makeup of the SUSA fund here. We've got Apple, Microsoft, Accenture, Alphabet. So first couple of stocks here are in the technology area. Salesforce, 3M Company, Home Depot, Cummins, BlackRock Inc., and Alphabet Class C. A little bit different mix of stocks versus the S&P 500. Therefore, it's had a little bit higher return. Here's the stock chart for the SUSA. Again, it's come off the lows and it's back at the highs where it was before the market crashed in February. That was a look at our first ESG fund, SUSA by iShares. We're going to look at our second fund here. This one is by Vanguard. It's the Social Index Fund. V is in Victor, FTAX. Now this is actually a mutual fund. Minimum investment is $3,000. You can get this either from Vanguard or your brokerage should be able to handle this. Let's take a look at some information about this. It's market cap weighted index composed of large and mid capitalization stocks screened to certain environmental, social, and corporate governance criteria. Specifically excludes stocks of certain companies in the following industries: adult entertainment, alcohol, tobacco, weapons, fossil fuels, gambling, and nuclear power. Keep in mind, as we are looking at these, we are looking at making more money, increasing our investing results. It has nothing to do with any political stance here. Let's take a look at the return on this Vanguard Social Index Fund. The last year was 12.11%. We said the S&P 500 was 8.91%. Let's take a look at the portfolio for this Vanguard Fund. Microsoft, Apple, Amazon, Facebook, Alphabet, very similar to the NASDAQ 100 and also very similar to the S&P 500. So a lot of heavily weighted stocks in the technology area in this particular fund. Then we have Visa, Procter & Gamble, JP Morgan, and United Health. Here's the stock chart for this Vanguard fund. You can see it's also rebounded off the lows and back to where it was prior to the crash. Okay, so we've looked at two of these environmentally friendly funds. These are in the ESG category here, and as we said, it's environmental, social, and corporate governance. We're going to look at the third fund. Now, this third fund has returns of over 2 times the S&P 500. So let's take a look at this third ETF here. It's the iShares Global Impact. Let's look at the investment objective. It seeks to track the investment results of an index composed of positive impact companies that derive a majority of their revenue from products and services that address at least one of the world's major social and environmental challenges. Here it says YSDG. Obtain exposure to global stocks aiming to advance themes related to the United Nations Sustainable Development Goals such as education or climate change. Target companies with leading ESG business practices that also build their business around products and services that may drive positive change. Used to increase exposure to sustainable themes in an equity portfolio. Again, not making any political statements here. What we're looking at is increasing our returns on our money. Let's look at the 1-year return for this fund here, SDG. The 1-year return is 27.52%. That's pretty impressive. 27.52% in the last year. Now let's take a look and see how this particular ETF invests its money. Tesla is the #1 weighted stock. And of course, Tesla's, I don't know how much Tesla's up this year alone, but it's had a tremendous year. So this was definitely a good call by this particular company. Vestas Wind Systems was the second weighted. This particular fund, SDG, is a global fund. So it's going to have stocks from different areas across the world. Now, some of these companies you may or may not recognize since they're worldwide companies. Procter & Gamble, AbbVie in the healthcare, Gilead Sciences, Biotech, Amgen in the biotech area. This gives you the exposure breakdown worldwide. United States 31.10%, China 11.9%, Japan 10.69%, United Kingdom, and we go on down through France, Denmark, Belgium, Germany, Chile, Hong Kong, and Korea. So you can see this is a worldwide fund. So again, this was the #1 fund that we're showing here today as far as their return, 1-year return of 27.52%. Let's take a look at the chart here of SDG. Again, excellent move off the lows. The SDG fund here has actually moved higher than the previous highs back in February prior to the market crash. So those are 3 different ETFs and mutual funds that you can use in your portfolio. These 3 funds have beat the S&P 500 over the last 12 months. If you have any comments, leave a comment. Thank you for watching.